Good morning, everybody. 360 in the house, and this video this morning is sponsored by 4cmediaco.com, bringing you the best in financial news globally around the world. So let's go ahead and get started. This video in particular, I'm going to try to keep it around 10 minutes or less. This video I want to do is on a margin trade that we took for Bitcoin in the 360 alerts. As you can see right here on the screen, we're looking at the overall structure for Bitcoin right now, which is in fact in a descending channel. So let me bring your attention to just a few things that you'll notice right off the bat. And that is that this structure has a very defined multiple touch. Matter of fact, this is a 5-touch now resistance, a descending resistance, and a multiple touch descending support or main demand for this this upside structure. Now, a lot of people have called this a top in crypto, that this is the top of Bitcoin, that the cycle is over. And there's many reasons why I do not believe that to be true. Many, actually, but one of the biggest ones is the way this is being, or the way this top is formed. And one of the things you notice immediately is just how well lined up these tops are. And what I mean by that is every time you consecutively go lower on these tops, the next one never takes out the high of the one before it. So here we have a high here. This one never grabs any liquidity above that. It just sets a lower high. And then we do it again here. So this high here never takes any liquidity from this one. And this one still remains. And you can see the story continuing on and on. And what has happened here is now you have a very layered, well-stacked, massive, I mean massive zone of liquidity that runs, quite frankly, from 70K all the way up to about $75,000. And let me explain something to you. There's billions of dollars in liquidity up here. Billions. Okay, that's not what tops look like. That's not what end of cycle tops look like, and that's not how whales distribute. If you go look at distribution tops, you will note that they actually peak sell into these spikes up, and they go grab liquidity that's been set before it. So every time you have a run up to the top, there's mass distribution. We'll talk more about this in the weekly video. I really want to talk about the trade that we took. So I want to bring your attention to the fact that this is over 166 days. 166 days, or 5.53 months to be exact. I know because I already looked, but you can measure that out yourself. And a key thing that to kind of remember when you do that is you don't measure from the entry into the zone you're talking about. You measure from the first top. Why is that? Well, because this move here, the first part of this zone, is a portion of this run. Okay, so this, while it's in here, this belongs to this price action move here. So you don't actually begin your count if you're counting how many days you're in consolidation, or you're counting how many days you're in the channel. I know I'm being technical. You want to count it from that first peak or that first high. So your count on how many days you've been in here begins from this top, okay? And that's how you count that. So if you measure from here to where we are now, that's where you get the math, 166 days, or 5.53 months. Yeah. All right, so there we go. So these are very hard to trade on leverage and margin. Why? Because this is full of leverage and margin wipeouts. I mean, it's full. So, and we've literally in the 5.5 months, I think we've margin traded inside of this zone twice, and we've done it both times. We've been successful. Why? Because I wait for something stupid, simple, with lots of confirmation, high probability. I don't take a lot of risk in here because your odds of getting absolutely zapped or wiped out are very, very high. So your best bet is to load longs at demand. If you're going to load spot, you just load on support. So you'd be loading down here, down here, down here, down here if you were doing spot. And then many people are doing that. But what I want to talk about is the margin trade that we took. Right now I have the daily chart up. I have the daily chart posted right here, right now. So we're going to take a quick look at that. So once we got this major demand structure wick low, major reversal, and you have to remember this was not Bitcoin only. Okay, this was not crypto only. This was global market liquidity wipeout across the global markets. That means legacy stock markets in the US and around the world. In almost every market that exists, you got this leverage liquidity global market wipeout, okay? And it clean leverage out of all markets. Boom. And that's what this was. So the fact that the daily closed back and regained main structure for me is bullish. Okay? So this grabbed all lower liquidity and reached a major demand zone. Boom, wicked back up, recaptured a very key support, bullish marker number one. And that was followed up by this meat stick of a candle right into the median. All right, this is the median, the 5-month median, where that was obviously going to hold resistance, and then you get to pull back. All right, so we're going to zoom in on this price action on the 4-hour. All right, so you can see what we did. But you can see bullish, bullish, pullback. Now I'm excited, now I'm alert, now I'm looking. All right, so let's go ahead and take a look. I just want to show you the setup on the Quran scale. All right, let's get this zoomed in for you. Yeah, all right. So here's the price action on the 4-hour chart. Again, down in that zone, nice move back up. And you can see the recapture. There's that recapture on the 4-hour of the major structure. And it closed that out on the daily. You remember seeing it on the daily. It closed that out. So, bullish factor number one. Boom, we got it. Let that sucker move on in. Hit major resistance. Now I'm looking. I don't like to buy green stuff as it's going up. I like to wait for pullbacks and pullbacks of lower volume. And so we started to build and develop this structure. If all of these, and I know it's simple, but all these pointy ends are now down and continuing to tap key resistance. Pointy ends, we got to tap, pull back deeper, tap down. In the meantime, and this is what I love, pull this down. You have, because of the impulsive move here, you have all this liquidity created by these green candles. All this liquidity. So I wasn't about to stop there because we had more liquidity. We 360 lead have been watching that. Boom, tap, tap again. Now we get the liquidity fill. So this comes down finally and pulls all of this liquidity right here. Bang. So now I know all the inside liquidity is gone. And now we get this move back up, and now I'm even more bullish. Okay, now I'm even more bullish. So I'm going to go show you this on the daily again because I want you to see the candle that we entered on. All right. So this is the candle that we bought. So you get that rejection here, but then you get this very bullish candle, and you have good volume here. Okay, good volume. After you already have your pullback, you already have your liquidity fill. Now you get a nice bullish candle. So we've got many taps on this door already. So we took a buy here at 61K on this candle. All right. So right in here. Yep, right in here. So many taps. You get your liquidity low, your fill, and now we get these higher lows, continue tap zone. So for me, this was a no-brainer that this was going to at least break this zone and head higher. And it did. Matter of fact, it did. Boom. We had our sell at 63 because there's resistance right in here, right there across, and this does play out farther. So we took 50% of our trade off the table here, which was a nice win. We want to be out before the crowd. So, and once we did that, we went ahead and moved our stop losses to our entry, which was 61. So we removed all risk. Why? Because if this does in fact hold up in this area, or this holds up, right here, then we can still be in this trade, but we don't want it too loose, especially because we have a win. So we don't want to win up here and then keep our original stops and lose some of that win by this coming down lower. So we moved our stops to 61. This is still above our stops and gives us a chance to play either a trade higher on the other 50% of the trade, whether that's here or whether that is here. And this moves up. Yeah, so we made decent money, quite a bit of money, and we can look to take the rest of our profits on a potential move to, the channel high right there. Nice and easy. Very exciting, very exciting, very exciting. I'm also looking for the potential of, I'm probably going to actually chase this here. The reason is because there's billions in liquidity here. And so once Bitcoin gets up here, Bitcoin is going to break this eventually. Trust me, it is going to grab all of this liquidity. When it does, it may have enough power to actually send this quite higher because it's billions of dollars here. So I can so as this climbs back up, I can start to move my stops up. But I think this probably comes up here, finds some resistance, pulls back a bit, kind of the same structure that we have down here, up here. Kind of the same idea up here. So we can take profits, look for more longs for that push. Yep, so there you have it. Very, 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 very simple. Very, very, very high probability based on good technicals and good market structure data. That's it for now. Until next time, baby, here comes the boom.